India's major oil trade with Europe may soon take a hit. A new round of European Union sanctions targeting Russian oil could put $15 billion worth of Indian petroleum exports at risk, according to economic think tank Global Trade Research Initiative, or GTRI. Now, the EU's 18th sanctions package aimed at curbing Russian oil revenues amid the ongoing conflict in Ukraine includes a major move, that is, a ban on refined petroleum products made from Russian crude oil, even if those products are processed and exported by third countries like India, Turkey, or the UAE. Now, the measure spares only a few close allies such as the US, UK, Canada, and Switzerland, dealing a potential blow to countries that have been refining Russian crude and supplying diesel, petrol, and jet fuel to Europe. GTRI's founder warned that India's $5 billion petroleum exports to the EU are directly in the crosshairs, with the broader export figure already falling from $19.2 billion in FY24 to $15 billion in FY25. That's a sharp 27% drop. Now, India has emerged as a key refiner of Russian crude, especially since the start of the Ukraine war. According to GTRI, India imported $50.3 billion worth of crude oil from Russia in FY25, accounting for over one-third of India's total $143.1 billion crude oil bill. If enforced strictly, this EU regulation could severely impact India's petroleum trade with Europe and may force Indian refiners to diversify sourcing or find alternative markets for their refined products. Meanwhile, Russia's biggest oil producer, Rosneft, slammed EU sanctions on India's Nayara energy refinery as unjustified and illegal, saying the restrictions directly threaten India's energy security. What's really playing out on the Reliance stock this morning, which, as we are seeing right now, is down about 2.17% or so in trade, is what is being heard from the European Union and sanctions on Russian crude oil. So both Reliance Industries as well as other stocks, including Nayara Energy, are under pressure this morning. Now, EU has set the refined Russian oil price ceiling now to $47.5 a barrel. Now, this new ceiling will be effective September 3rd. Remember, this is a climb down from the current ceiling for refined Russian oil at $60 a barrel. As I told you, stocks like Reliance Industries, Nayara Energy are major exporters of refined Russian crude to the European Union. Also remember, India imports about a third of its total crude oil from Russia. Now, we also have a statement coming in from Rosneft Oil Corporation, which is Russia's leading crude exporter, which has said and condemned pretty much the European Union's decision to impose restrictive measures on the Indian refinery of Nayara Energy as unjustified as well as illegal. Now, energy continues to be under pressure for India, as Rosneft has also said that the imposition of sanctions against refinery directly threatens India's energy security and will have a negative impact on India's economy. Now, this as per the Rosneft statement. Let's quickly bring in Kranthi Bathini, who's joining us this morning with an update. Kranthi, good morning. Thank you for your time this Monday morning. Explain to us, what do we make of stocks like Reliance Industries despite a handsome growth in profit as well as revenue announced on Friday? We are seeing the stock is down about 2.25% in trade. Mostly, it seems, stemming from fears around a ban or a sanction on the ceiling by the European Union as far as its import of Russian oil and export to the EU is concerned. Explain that to us.
Yeah, Kartik. Last couple of years have been a good time for India. We have been importing the Russian oil, and it has been refined in Indian refineries, especially like the Reliance and all. And we have been exporting the same oil to European and other nations. So the current implications of the European Union as well as the US making the sanctions on Russia, that's going to have direct impact on Indian refineries right now. But these are the geopolitical issues that are going to have some kind of impact in the medium to short term. But we need to see if there are any kind of negotiations that may improve in this region, especially between US and Russia. Okay, that can be some kind of a positive impact. But by and large, it's going to impact the earnings of these Indian refineries in the medium to short term. But we need to see how these trade deals are going to progress in the next coming weeks. But by and large, in a medium to short term, it's going to have impact on the refineries in India.
All right. So, of course, there is likely to be an impact on refineries in India, but India is also contesting these sanctions. And India's sort of, the whole purpose of India importing cheap Russian oil, and this is something that the External Affairs Minister had said and has been saying for the last 3 years, ever since the start of the Russia-Ukraine war, is to secure its own energy needs. And the fact that Europe's problem are Europe's problem and not India's problem. Do you think there's going to be some softening of that narrative now, given the fact that these sanctions are likely to hit India's oil exporters like Reliance and Nayara?
Absolutely, Kartik. As a second largest consumer of oil in the world, an importer, second largest importer of the oil in the world, we have every right to procure oil across all the oil producing nations in the world. But now the sanctions are coming from the European region. Of course, European region do import a lot of gas from Russia. That's going to have impact on them. At the same point of time, right now, the US is the major oil exporter, and it's turned to be one of the key exporting country in terms of the energy resource are concerned. India can also import from gas from US at this point of time. So right now, the major key is played by US at this point of time to increase their prominence in terms of the oil exports are concerned. That's where the medium to short term outlook is looks little bit murky at this point of time. But we need to see how things are going to pan out. India, one of the strong importer of oils, they try to get the deals wherever the best price is available. We have every right, but as for the refiners are concerned, they have to export. That's where the key math plays in this entire story.